This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcasts. It's Friday. What am I doing here?
I know. How are you feeling right now?
I don't know what happened here. The whole world's upside down. My driver had no idea what he was doing picking me up this morning. It's Friday here, but it's a busy Friday. We're going to go out to Jackson Hole later this morning. Tom Keene, Lisa Baramitz, they're out there. We're going to be hearing from them. They're going to have a special edition of Surveillance from 9 a.m. to 11 a.m. Wall Street time, kind of previewing what we're going to hear from Fed Chairman Jay Powell out in Jackson Hole. So that'll be some good stuff. We're also going to start off really strong here this morning. Our good friend Ann Sonders, Chief Investment Strategist at Charles Schwab, is going to join us. George Bory, Chief Investment Strategist, Fixed Income at Allspring Global Investments. He's also going to be here. And we're going to check in with Tom Keene. And he's getting up early out there. And around 8 o'clock, we're going to check in with Tom, get a little preview of what we're going to hear from Jackson Hole. So a lot of stuff happening here, 9 to 11. Alix Steel sitting in for Tom Keene. We're going to be here for a couple hours. And we're going to come back. I think we're coming back at 11.
We are coming back at 11.
11 to 12. So after Lisa. We got it all covered this morning. We're all good. Let's kick it off with Lisa Mateo with the Bloomberg Business Flash. Lisa.
You got it. We've got futures ticking higher. This is in the run-up to Jay Powell's Jackson Hole speech this morning. Traders are kind of waiting to see whether he's going to open that door for interest rate cuts. His address at the annual symposium in Wyoming, well, it's really hung over markets all week. Many have wondered if his speech will cool off expectations for aggressive interest rate cuts. We shall see. Investors right now pricing in a quarter-point rate cut at the Fed's September gathering, but see almost a full percentage point of reductions by year end. We've got NASDAQ futures up 0.8%, 159 points. Dow futures up 0.3%, 160 points, and S&P futures up 0.5% or 31 points. The two-year yield at 3.99%. That's down 1 basis point. The yield on the 10-year 3.84%, and that is little change. While the drama continuing for Paramount Global, sources say Skydance Media accused the company of breaching their merger terms by pursuing another deal with Edgar Bronfman Jr. Now, Paramount down nearly 1%. Then we have shares of Nestle down more than 1% in Switzerland. It announced its CEO, Mark Schneider, being replaced after 8 years running the company. Nestle's Latin American chief, Laurent Frex, will take over next month. And would you want your next Uber trip to be from a self-driving car? Well, the company,
no,
I know,
no.
I'm
Thanks
with
for
you.
asking, though.
I'm with you.
Yeah.
The company says it does plan to offer autonomous General Motors cruise cars to customers next year. Now, that is raising a little bit of a red flag for investors. Shares right now lower before the bell. They're down about 0.5%. That is your Bloomberg Business Flash. Alix and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. That is the internet. So head over to youtube.com and search Bloomberg Podcast. That's where you'll find us. And if you're listening to us in Boston, listen up. Our new home starting September 3rd will be 92.9 FM. That's the day after Labor Day. Bloomberg Radio moving to 92.9 FM in Boston. That is a big signal up there in New England, so we're happy about that. Let's check in with Ann Sonders. We need some help here. Chief Investment Strategist for Charles Schwab. Ann, I'm looking at the S&P, NASDAQ, both up double digits this year. We had a real scare, I guess, almost 3 weeks ago on that crazy Monday. Where do we go here for the remainder of the year? We're all going to be paying attention to Fed Chairman Powell today. But let's think a little bit beyond that. How are you feeling about these markets going forward?
Well, you talk about the big scare, and it really was just concentrated in that 1 week, and in particular on August 5th, and that had a lot to do with the unwinding of the yen carry trade. But even before that, the calm really was only on the surface. Even before the pullback that brought the NASDAQ into correction territory, you had no more than a 7% drawdown in the NASDAQ, but the average member maximum drawdown just year to date was negative 40%. That's now negative 43%, alongside at the index level, the NASDAQ being down 13%. So there has already been a tremendous amount of churn and rotation and even turmoil under the surface may be more reflective of all of these uncertainties that we're still dealing with than what you would pick up if you just looked at the index level. Jackson Hole is important. Obviously, the September FOMC meeting, we're thinking 25, not 50, barring a more significant surprise in some combination of the PCE that's coming up and the jobs report. But at this point, we're penciling in 25 as the start point.
Lizanne, Tom's going to be so sorry that he missed you, I just got to say. If we see, though,
Ditto.
cuts not in a recession, not in a recession, does that change the leadership profile? Like no financials, stay with tech. Does it change how you think about it?
Yeah, what does tend to happen is if you look at past cycles and you see the Fed operating more slowly, ostensibly because they're not combating a recession or a financial crisis or some combination thereof, not only do you see milder maximum drawdowns within, say, the 6 months or up to a year following the initial cut, you tend to see more of a cyclical bias in terms of what does well at the factor level, at the sector level. In contrast, the fast cutting cycles, where ostensibly they are combating a recession and or financial crisis, like was the case when the Fed started cutting in 2006. We all know what was still ahead of us. That was those were backdrops where there were greater maximum drawdowns and more defensiveness in terms of factor and sector-based leadership. So I actually say to people who are looking for or hoping for an aggressive Fed, be careful what you wish for. It's the why behind the Fed starts a cutting cycle and the level of aggressiveness that defines how markets behave.
Lizanne, what did you learn from this earnings cycle that we just pretty much closing up this week?
So, the beat rate and the percent by which companies beat was about in line with recent averages, better than long-term averages. However, the same cannot be said on the top line growth. So you had a below average beat rate on revenue growth. You had a below average percent by which companies beat, not to mention the fact that third quarter estimates trended down, even though second quarter ended up being loftier than expected. Within the sort of AI theme, I think part of the reason why you went into correction mode for, call it the Magnificent Seven, et cetera, that group of mega cap names, is because there was a lot more emphasis on the timing gap between the expenses associated with AI and the revenue generation associated with AI. The last thing I'd say is I think there's increasing attention on the revenue side of the equation because revenues in general tend to correlate more with what decisions made about the labor market, more so than bottom line growth. So I think those were in focus in the second quarter, will continue to be as we approach the end of the third quarter.
Do you think NVIDIA next week is going to be a market event or an NVIDIA event?
Tell me what they report. It's certainly going to be incredibly important to either affirm what has been valuation expansion, not just there, but in the broader space. I don't cover the stock. I don't cover any individual stocks. I don't want to say it's make or break, but these days a name like that can be make or break in terms of the importance of that report as a feeder into the narratives that have sat behind where leadership has resided, where valuation expansion has been most robust, and the opposite.
And so that kind of goes to, I guess, a question I ask a lot, Lizanne, which is, it seems like for the longest time, this market has been driven by technology, and for good reason. I mean, technology has been a leading driver of this market. Is that still the case? And if
not recently.
Yeah.
So far this quarter, the Magnificent Seven is underperforming the rest of the market. If you look at the past month or so, and you look at where fund flows have been concentrated in the ETF space, it's actually been in areas like utilities and in real estate. So I think it's that anticipation of a Fed finally moving into cutting mode that has given a lift to those more interest-sensitive areas. And you've commensurately seen outflows in tech. I don't know that persists in any kind of linear way. I think what's been shown over the past month or two is that there's not only money looking for opportunities outside of the Magnificent Seven, but there's also still a lot of interest in better entry points in some of those names. So I would expect more of a choppy pattern, but you clearly have seen a shift in leadership more toward those interest-sensitive areas as we await the September FOMC meeting.
Yeah, and from that top that we hit in July, the SOX, the semi-index, is down like 13%.
Whoa, okay.
So, I mean, they've definitely rolling over quite a bit. Last quick question, Lizanne. Is today going to be a market event?
I doubt it. I think given the emphasis on data dependency and the fact that we still have PCE and the jobs report in front of us, Powell may touch on the BLS benchmark revisions, but I can't imagine he has the data that would suggest a significantly more dovish shift than what's built into expectations. So status quo for the most part.
All right, Lizanne, thank you so much for joining us. Always appreciate getting a few minutes of your time. Ann Sonders, she's a chief investment strategist for Charles Schwab. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. Alex, Lisa, Vice President Kamala Harris accepted her party's nomination for president as she wrapped up the Democratic National Convention in Chicago last night. The vice president warned if elected, former President Trump would enact a national sales tax.
Instead of a Trump tax hike, we will pass a middle-class tax cut that will benefit more than 100 million Americans.
Meanwhile, Donald Trump called into Fox News after Harris's speech, saying she hasn't accomplished much as vice president.
The biggest reaction is, why didn't she do the things that she's complaining about? All of these things that she talked about, we're going to do this, we're going to do that, we're going to do everything, but she didn't do any of it.
Donald Trump also made several posts on his social media platform providing real-time critiques of Harris's speech. Robert F. Kennedy Jr. withdrew from the ballot in Arizona late yesterday, a day before he and Donald Trump were set to appear miles apart in the Phoenix area. This as speculation grows that Kennedy could drop his independent presidential bid and endorse the Republican nominee. Kennedy is scheduled to speak at 2 p.m. Eastern Time in Phoenix about his path forward. We got reaction from Terry Haynes, founder of Pangea Policy.
I think it matters less than most people think. I think the withdrawal impact of RFK Jr. really is almost nil. Kennedy's numbers have been falling through the floor, or they're down to roughly 4% nationally. Some RFK Jr. supporters probably have already gone to Harris. Others might stick to Trump. But and I think the vast majority of those people end up undecided for a while and end up trying to figure out exactly where they should go and why. So, but again, we're talking about a percentage or two at this point. So I really don't think that Kennedy's withdrawal makes much difference.
Terry Haynes of Pangea Policy. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, Alex, Lisa.
Michael Barr, thank you so much. We appreciate it. I'm just looking at some of the reporting from out of the Democratic National Convention. They didn't spend a lot of time on the environment and kind of going green. It seems to be a little bit on the back burner. I wonder why that is. Maybe they just sense that it's not great politics at the moment.
I mean, it seems like you want to appeal to the base, but to get those independent votes, you want to move to the center, right? I mean, isn't that what happens when you become a presidential candidate? You move to the center. Yeah,
I mean, it's interesting. Harris and other primetime candidates, including running mate Tim Walz, largely shied away from highlighting green accomplishments made by the current White House, even the hundreds of thousands of jobs and hundreds of billions in planned projects tied to those policies. So you wonder where that's going to be in the campaign coming up.
They did have a really successful package, I felt, that was about unions, and it was about breaking ground on new projects, whether from the Semiconductor Act, the CHIPS Act, or from the IRA, which I thought was really quite interesting. And I was like, right, okay, it creates jobs. Like, where is that message? It's like they didn't connect the dots for so long on that, but that was a pretty successful one, I thought.
So when's the election? I mean, we still got a couple more months.
72 days.
Okay, all right. So we got
78.
that.
Apparently,
that to look
a lot can happen in that time.
I kind of like this little compressed.
Oh my God, I love
here.
it. Let's just keep
stuff.
doing that.
All right, we're gonna have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures on the rise as all eyes turn to the Federal Reserve Bank of Kansas City's annual gathering, Jackson Hole, Wyoming, and what really Fed Chair Jay Powell will say during his keynote speech this morning. Now, aside from Powell's keynote, there's also more economic data due out today with new home sales for July, and that comes after existing home sales rose for the first time in 5 months in July. Now, ahead of all this, we have NASDAQ futures up about 0.8%, 157 points. Dow futures up 0.3%. We have S&P futures up 0.5%. The 2-year yield at 3.99%. That's down 1 basis point. The yield on the 10-year, 3.84%, and that's down 1 basis point. To commodities, we have spot gold higher, $2,498 an ounce. We have Brent crude, $78 a barrel. WTI crude, $73 a barrel. Southwest, it could be scrapping another perk. The carrier polling customers on changing its bags fly free policy. Their shares right now up about 1%. And it looks like consumers are seeing some good value in fast casual restaurants. We have Cava. It raised its full year outlook after posting second quarter results, beat expectations, shares up more than 8%. Nice. The grilled steak offering, that was a popular choice. And they also enjoyed adding on side orders like pita chips and juice. And finally, shares of Crocs. They're getting a lift, up 1% thanks to the company's partnership with actress Sydney Sweeney. Now, investors hoping it's going to attract some younger customers, bring some attention to its Hey Dude line of shoes. My husband loves those. That is your Bloomberg Business Flash. Paul and Alex.
Okay, what is the Hey Dude line of shoes? Because on TV, we were going all over about this, and we didn't understand what was happening.
My husband loves it. He says they're the most comfortable thing in the world.
Wow.
Are they made of plastic like Crocs?
No, it's different. It's different. It's not like the plastic thing. No, it's completely different, but it's just as comfortable, he says, because he has Crocs and Hey Dudes.
I will go with Mr. Mateo on this one.
Yeah, all right.
Why not?
I
That's
buy
a big
it.
speaker. Lisa Mateo, thank you so much. Good stuff there. We appreciate it. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. All right, I'm an equity person. So when I think about fixed income, I'm like, interest rates up, bond prices down. I think that's how it works. But we have some folks we talk to that are a lot more smart on this issue. George Boyer is one of them. He's Chief Investment Strategist for Fixed Income at Allspring Global Investment Management. Hey, George, thanks for giving us a few minutes of your time here. It's been some volatility in this market over the last 3 weeks that's been kind of unusual. Talk to us about the bond market. Where have you seen the volatility? Where have you seen maybe some opportunities presenting themselves?
Yeah, sure. Good morning. Good morning. And thanks for having me on the show. You're absolutely right, Paul. There has been, kind of about a volatility over the last couple of weeks in line with the rest of the market. And I think if we look at the bond market today, we look at the level of yields, it's interesting. We're right back to where we started the year. The U.S. 10-year Treasury started the year right around 385, which is about where it was towards the end of last year, the beginning of this year. And that's right where we are today. While there's been volatility bouts, and we certainly saw yields move higher back in March and April, we have been on a fairly steady downward trend since then. And that trend actually has accelerated rather than decelerated as sort of a confluence of factors have come together. Many people have talked about the volatility just a few weeks ago, but the expectation that inflation and price volatility is coming down has been sort of increasingly worked into the bond market. The bond market is getting less and less scared of inflation as the economy decelerates and as inflationary data comes in pretty much in line with expectations, but this sort of slow, gradual decline, it helps support bond yields. It helps support bond prices. Inflation is the bear bug of any bond investor because it erodes your purchasing power as we move through time. And so as those inflationary fears have abated, bond yields have steadily come lower. Now, the volatility has come from growth fears, not inflation fears. And the concern just a few weeks ago was, oh Lord, or oh goodness, is the labor market rolling over? Well, we don't think it's rolling over. It's clearly perhaps not as strong as many thought, but there's some evidence of deceleration on the economic side. And so now, expectations for slower growth are now working their way into the narrative. And so bond yields have been on a steady kind of march lower from the highs we saw back in March and April.
Right.
But today, bond yields are right back to where we started the year.
So George,
we've largely come full circle.
So George, let me ask you, I think oh dear is a really mild way of putting what the markets felt in the beginning of August. The market's still pricing in 96 basis points if you look at WIRP. Is that in line with what you actually expect to hear from Powell today, and also with how you look at the economy?
Yeah, no, I think the market has clearly moved to price. You know, the market is pricing in easier policy, and I think there's this oscillation, there's this debate as to how strongly and how aggressively the Fed is going to move. And we, along with many other people, expect a slow start, and then the market is now sort of pricing in an acceleration of that pace as the economy is expected to slow. The question really becomes, is it a hard landing or not? There doesn't seem to be strong evidence that a hard landing is coming, that it's imminent. And so we think the market is getting a little bit ahead of where the Fed is likely to end up. The runway, if you will, to kind of go slow and steady seems to be available to them between now and the end of the year. Now, if the labor market does show notable signs of weakness, or we have kind of a meaningful slowdown in growth, then obviously they have the capacity to accelerate that pace. But right now, our view is basically they could go sort of one cut every meeting for the next 4 meetings and be in a pretty good spot to evaluate the economy to see if the soft landing is truly kind of emerged. And I think, as the prior speaker discussed, there's no urgency to go fast and furious. They don't need to go big at this point, but they do, and they want to calibrate policy to be in line with those sort of lower inflation expectations. And so to the extent the inflation numbers continue to decelerate, that would be perfectly in line with the broader macro backdrop. So we spend a lot of time debating this difference of 25 basis points, but over the next 6 months, could we see rates, Fed fund rates, 100 basis points lower? Yes, we could, and we think that's an appropriate pace given what we know about the economy today.
George, I'm looking at the INGO function on the Bloomberg terminal. It gives you the Bloomberg Index browser. I see some green on the screen for fixed income. That's a nice, pleasant surprise here. The leading performance is from U.S. corporate high yield. Talk to us about the U.S. high yield market.
Yeah, sure. I mean, bonds this year, what I like to tell people are bonds are generating bond-like returns. It's basically income plus a little bit of compression with some price appreciation. Obviously, we just discussed, we've had a little bit of volatility, sometimes a lot of bit of volatility, but generally speaking, bonds are doing exactly what they're supposed to do. It's the coupon, it's the income, it's sort of that stream of cash that comes to you, sort of throughout the year, and reinvesting that money is what's driving your returns. The more yield you get, the higher the returns. High yield specifically has done fairly well this year. I mean, we're on track for probably an 8% total return year. Nice. For an asset class that started the year yielding in the low 7s. Actually, yields have come down a little bit, and sort of the reinvestment of those coupons allow you to kind of generate what we think will be mid to high single-digit total returns.
Yeah.
That's a pretty good year for high yield. And as I just discussed, the underlying economy has still largely been there to support the high yield market. Profitability, while sort of has slowed a little bit across the corporate landscape, is still fairly robust. Corporate America is still doing well, still making good money, and that flows through to high yield bond investors.
All right, George, appreciate it. Thank you so much, George Borey, Chief Investment Strategist for Fixed Income at Allspring Global Investments, joining us. I want to get back to the Hey Dude thing.
Yeah.
Paul, I think you need these shoes.
All right, let me take
these
a
are
look.
basically beach shoes.
They're beach shoes. They totally are.
Nice.
These are like, but I can also see them. They're like a little preppy beach shoe. Like I kind of see this working for him, like in the office.
Yes.
And then he goes straight from the office right to the beach. Like I'm kind of seeing it. Lisa, are you with me?
I'm totally.
She's
especially with the pink blazer. It would go perfect.
He's a pink blazer.
I can walk from the train station to the beach.
That's why I think you need to look at these shoes.
Okay,
and they're only $50. Okay, so now I'm looking at that.
Go.
All right, coming up, Tina Fordham, founder at Fordham Global Insights, will help us wrap the DNC what she thought of Kamala Harris's speech. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures pointing to a higher open. Investors awaiting words from Fed Chair Jay Powell this morning as he continues toward his goal of bringing inflation down without a recession. Now, the latest U.S. economic data, well, it was mixed. Yet American jobless claims data showed labor market is cooling only gradually. U.S. manufacturing activity, that shrank at the fastest pace this year, and existing home sales increased for the first time in 5 months. Today, we're going to get new home sales for July. So all that said, NASDAQ futures up 0.7%. We have Dow futures up 0.3%. S&P futures up 0.5%. To currencies, the dollar retreating, the yen strengthened after hawkish comments from the Bank of Japan governor. Right now, Japanese yen at 146.06 against the dollar. The British pound stronger. Bitcoin right now up 0.2% at 60,000. Shares of Ross Stores, they're up 5%, boosted its earnings per share forecast for the full year. And then you have Nvidia reporting earnings next week on Wednesday. Shares up 1% right now as investors wait to see if that AI-fueled tech rally has a little bit more room to run. And finally, the information. It's reporting Google has named Noam Shazir, the former CEO of Character.ai, to co-lead Gemini. Google up about 0.5%. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio in New York City. We're also streaming live on YouTube as well. And if you're listening to us in Boston, our new home starting September 3rd will be 92.9 FM. That's the day after Labor Day. Bloomberg Radio moving to 92.9 FM in Boston. I guess we've got the Democratic convention done in the books. Same for the Republicans. So now I guess both candidates hit the campaign trail and they go hard until early November, November 5, when we get this election going. Tina Fordham joins us. She's the founder and geopolitical strategist for Fordham Global Insight. Tina, what do you make of the week that the Democrats had in Chicago? What are your takeaways?
Well, what a high energy event. There wasn't a lot there for investors or business leaders to really grab onto, but that wasn't the point of this exercise. It was an interesting kind of a romp through Democratic Party leaders from the past with the Obamas and the Clintons, the future with Buttigieg and AOC, and then Harris's acceptance speech last night. So, quite an endeavor.
It was truly historic, honestly. I mean, even my 10-year-old daughter asked to watch her speech.
Really?
Yeah.
Well, that's
like
pretty cool.
maybe she was also trying to stay up later, but
Right.
she genuinely seemed to want to watch her acceptance speech. It was definitely an historic moment. As Paul pointed out earlier, Tina, she also, Kamala Harris moved away a little bit from some of the lefter policies that we've seen from the Democratic Party, particularly in climate. What does that tell you about where she's headed and what her messaging and policy will be over the next 3 months?
If she wants to win, she has to move to the center. What we saw last night and the messaging that was coming through this past week at the DNC was a clear shift away from the Bernie Sanders, the hard left, and from candidate Harris from 2020, right? She has walked back a number of those positions. A bit of economic populism in the little that we've seen on that front, but she was very much campaigning on being a president for all Americans, for the middle class, and also not othering herself by talking about gender or race. That's a big contrast compared to Hillary Clinton's approach.
Tina, what do you expect the strategy to be from former President Donald Trump here over the next 3 months?
He is going to have to catch up a lot quicker than we've seen so far. Democrats are playing offense, which is something that they haven't necessarily done well. They're not historically a terribly disciplined party, which is why I think these last few days have been so effective. In September, the rubber hits the road with the polling. We'll see if there's been a convention bounce. But Trump is on the defensive, and none of his lines of attack seem to have really stuck just yet. The debate on September 10th is going to be where all of this comes into focus. And I think it's going to be a tough night for Donald Trump.
What do you think What do you think independents and moderate Republicans are making of this race right now?
Well, we're just starting to see that data coming in. Frank Luntz, the pollster, has talked about some of his focus groups where there is some evidence that independents are moving toward Harris. Harris is still struggling, though, with non-college educated voters and a number of men. But it's really early days. Remember that, most people have a life and aren't political junkies who are glued to political conventions, let alone watching them in the middle of the night, as I am here in London. So it will take time to filter through. Americans don't tend to really pay attention to elections until September or October. Of course, Trump is a known quantity and Biden was a known quantity, but this past week has been Kamala Harris really introducing herself to the American people, and Tim Walz alongside her, and we need to wait and see what the reception has been.
Tina, how do we get to the point where these elections come down to 6 or 7 swing states, and that's it? How do we get here?
Yeah. Well, we've been in this place for quite a while now. This is the 5th U.S. election that I've covered as a professional political analyst. It was ever thus, as long as I can remember, that these swing states hold so much sway. Be careful saying that 10 times fast. And it means that we're going to be on a knife edge, right? Going into this campaign. Harris can take nothing for granted, and Trump can't make any missteps. The fundraising, the appearances, the messaging. I'd argue that Trump needs to come up with some other messages. What happens with RFK Jr. stepping aside and potentially, casting his support for Trump? We're talking about splitting the difference on 1.5, percentage points.
Yeah.
But that's how close it's going to be.
Yeah, there was a John Oliver piece on RFK Jr. saying, like, we can write him off as like being crazy or whatever, but he actually has a lot of votes, and a lot of them are in swing states, and they're percentages. They're very small percentages, like let's say 1%, but that could, as Tina just pointed out, swing the election on that point. When do you think we're going to get more policy from Kamala Harris that then CEOs in Wall Street can kind of understand her a little bit better? And when is she going to sit down with a journalist?
She promised to do some interviews at the end of the month. I mean, let's remember what a whirlwind in timing this has been. I'd say she used the convention exactly the right way, which is to unify the party. Democrats are not very disciplined, and we didn't see, kind of eruptions into protests over Gaza and the things that were feared. How many columns did we all read about whether this would be a replay of 1968 Chicago?
Many of them, Tina.
Yes, many, and nothing like that transpired. So, that box is ticked. The party is united behind her, and a mainstream message. The next stage, I would argue, is more detail on policies. We see both Harris and Trump being pretty heterodox in their economic policies in their different ways. How much Harris will provide detail, there's not a lot of upside for candidates in doing that. As much as, of course, corporate leaders, business leaders, investors are looking for more detail, providing that is likely to see her lose votes. And so it's going to be a very careful balancing act. I do think she'll say more. She's already walked back the kind of poor reception that the price gouging on goods saw. Her policy on that didn't land very well. But right now, she's got to make sure people know her and feel safe with her. I mean, if I can carry on going just for a moment, in our business, we talk to global investors, especially here in Europe, and the remarks that she made on the U.S. not abdicating its global authority is actually the number one question that we have from international business. Is the U.S. going to remain part of the global security architecture? So that was quite an important point for an international business audience.
Tina, what role, if any, do you expect President Biden to play in this campaign?
Good question.
I suspect it will be a subdued role. And again, we need to see how the numbers evolve. He was, treated as a conquering hero, a lot of love for Joe Biden at the convention. It's not clear necessarily whether he would be an asset on the campaign trail or for fundraising. I mean, Harris's fundraising numbers have been through the roof. She's out fundraising Trump by a couple of times over. But what Biden can do with his time, yes, he's a lame duck until January 20th, 2025, might be quite interesting to watch. So, for example, the fact that he's not campaigning might free him up to do more on the Middle East. I think we haven't heard the last from Joe Biden.
All right, very good. Tina, thank you so much for joining us. Tina Fordham, joining us here, founder and geopolitical strategist for Fordham Global Insight, weighing in on this political season, which is really kicking into high gear right now. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. Alex, Lisa, Vice President Kamala Harris urged Americans to seize a precious fleeting opportunity to move beyond political divisions as she closed out the Democratic National Convention. After accepting the Democratic nomination for president last night, Vice President Kamala Harris warned the crowd at the DNC in Chicago the consequences of re-electing former President Trump.
And we know what a second Trump term would look like. It's all laid out in Project 2025, written by his closest advisors. And its sum total is to pull our country back to the past. But America, we are not going back. We are not going back. We are not going back.
Donald Trump called into Fox News after the speech, saying Harris hasn't accomplished much during her tenure as vice president.
Look, she's a Marxist. She always was. She always will be. She's going to leave the border open. I was there today, and the Border Patrol, as you know, gave me total endorsements and all of that. I've gotten endorsed by almost every major police group in the United States. But she is a Marxist with open borders. She's not going to have any fracking in Pennsylvania. She's going to close down the oil and gas industry, and our country is going to go bust.
Trump also made several posts on his social media platform, Truth Social, providing real-time critiques of Harris during her speech. Robert F. Kennedy Jr. withdrew from the ballot in Arizona a day before he and Donald Trump were set to appear miles apart in the Phoenix area. Kennedy will speak today in Phoenix about his campaign's path forward. Speculation grows that Kennedy could drop his independent presidential bid and endorse Trump. Indian Prime Minister Narendra Modi has arrived in Kyiv, where he will meet with Ukrainian President Volodymyr Zelensky. Officials in India and Ukraine say the visit will focus on boosting economic ties and cooperation in defense, science, and technology. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Alex, Paul, Lisa.
Michael Barr, thank you so much. We appreciate it. WTI crude oil, $74. Are we just kind of range bound here? Is that okay?
Yep.
Okay.
Good
OPEC?
talk. Yep.
OPEC?
OPEC going to be range bound. They're going to want to add production back.
Because
Hopefully
they had cut production.
Yep.
Now, does that...
And they wanted to come back, but it's sort of like the Fed. It's like, how do you bring something back when you're already trading a little bit heavier than they might want to see? If they bring it back too fast, too much, do we get into the 60s? They might not like that so much. So that's my jam. Your jam, Paramount? Do they have a case here?
No. I don't know where this thing goes. Whoever wants it can have it. I don't know the future of it, and I think that's reflected in the price of Paramount. The market is just saying we don't really have a good handle on value. We'll take anybody's deal. Somebody come forward with a deal, and we'll take the deal, because that's kind of where we are.
So Skydance isn't... Do they have a case on the whole Paramount is negotiating?
Yeah, they've got a deal. I think they kind of do. They have a deal, but there was a go shop provision, and Mr. Bronfman came in right at the last day on that go shop. So everybody's negotiating in good faith. We'll see how it plays out. We're going to have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Yes, it is the countdown to Fed Chair Jay Powell's keynote speech at the annual symposium in Wyoming. Now, aside from Powell's address, the three-day conference is also going to feature a speech from the head of the Bank of England, Andrew Bailey, a panel discussion on monetary policy, and also a presentation of 4 research papers from economists. Ahead of all this, we have NASDAQ futures up 0.7%, Dow futures up 0.3%, S&P futures up about 0.5%. The 2-year yield at 3.99%. That's little change. A yield on the 10-year 3.85%, and that is little changed. To commodities, spot gold higher, $2,499 an ounce. We have Brent crude $78 a barrel. WTI crude $74 a barrel. Shares of Workday higher, up about 12%. Executives said the company would sharply increase profitability over the next 3 years. Then you have shares of Alibaba higher. Their ADR is up 2%. The reason why? Well, shareholders approved a plan to upgrade its Hong Kong listing to primary status. Now, that's expected to attract billions of dollars in investment from mainland China. And finally, BP bought a stake in a Chinese sustainable jet fuel company, and that's giving it a stronger hold in one of the world's biggest aviation markets. ADR's up nearly 1%. That is your Bloomberg Business Flash. Alex and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene this morning. He's out there in Wyoming somewhere on a horseback.
So
I don't know.
I really hate to admit this, but I did have a dream about Tom Keene last night, in which he asked me if he should go drinking at the bar, at the $1 Million Cowboy bar, even though he had to get up early to interview people for the Fed special.
And of course you said, sure.
And I was like, yeah, you should.
Yeah.
Well, I think it was more like, how do you feel about that? And we talked about it a little bit. And then I was like, I think you should go. And then my alarm went off.
Dreaming about Tom Keene. There you go.
Tom Keene drinking. I think that's just,
very good.
You're welcome for that.
All right, looking at futures here. S&P up about 0.5%, NASDAQ up about 0.8%. We're joined now by Quincy Krosby. She's a chief global strategist at LPL Financial. Quincy, we're going to go out to Jackson Hole in, a few moments, and Tom Keene and Lisa Bromwitz is going to be anchoring some coverage there. What do you expect to hear from Fed Chairman Jay Powell today?
It's probably going to be leading us again to September 18th rate cut. But the fact of the matter is he's not going to be locked in. We've got inflation news next week. They've got the labor market report on September 6th. There's a lot of information before they actually go ahead and make the decision. And you also have a number of the Fed members suggesting that they are not yet ready to cut. They need more confirmation. Perhaps the report next week will help them, but nonetheless, they're out there speaking that they are not yet ready to agree to cut. And also what we learned from the Fed minutes, I thought was interesting because we had heard chatter after the July 31st meeting that there were a number of members suggesting that they were thinking there should be a rate cut on July 31st because of the labor market. And it was actually confirmed in the minutes where they talked about several members observing that perhaps it would be prudent to do that. So the question is, how does he characterize that in his talk? I don't think he wants to be locked in by the market. He doesn't want to be locked in by the probability Fed funds futures market. But the market is sure, almost certain, that there's going to be a rate cut. The question is it going to be 25 basis points? Right now, the Fed funds futures market looks like that, although we saw a little bit of a move higher, 450 basis points, about 30% probability after the release of the preliminary benchmark estimate for job creation.
Right. Quincy, you make such a great point that there is still a divide in the Fed. But the market seems to be pricing in 96 basis points of cuts so far this year. How off do you think the markets are?
I think it's off, unless it is about the labor market. I mean, the Fed is going to go and cut rates regardless of the timing, regardless of the election, if the labor market demands it. But there's another element here, and that is there is expectation that the inflation will come down and that the economy is going to cool along with the labor market, and that you have labor and inflation down. However, there's brewing, I have to use the word brewing, a sense that going into the fourth quarter, we may see an uptick in inflation. That is the worst scenario for the Fed, because they know that if that happens, they'll be accused of introducing stagflation. So he's going to be very careful. The Fed is going to be careful. And now I know he doesn't talk about this data point or that data point. Now it's become the totality of data. He's going to use that word many times, I think, in his talk, because he doesn't, want to be locked in by one particular data point.
Quincy, it seems to be we're at a point where many of the world's central banks are cutting rates, considering cutting rates. As chief global strategist, where do you see some of the best opportunities out there in that type of environment?
Well, in Canada, they look as if they're going to be cutting yet again. Yeah. And that's a fairly conservative central bank. They've already cut twice. They're already leading the market to yet another cut. Even in Japan, and this is interesting, given the yen carry trade issue, is that the head of the Bank of Japan made it very clear that we will have another rate hike if it is necessary. He made no mention of the concern about the potential for the next unwinding of the yen carry trade. Actually, right now, an opportunity is using the dollar as your yen, as your carry trade currency. The dollar has come down. It'll probably come down more after Chairman Powell speaks, if it's dovish enough. And we know that from the data that the dollar is being used for the yen, for the carry trade. Yeah. So that's interesting, because we haven't seen it. All we do is talk about the yen carry trade. As long as I've been in the business, it's about the yen carry trade. Suddenly, the dollar is there.
Totally. And I feel like I've heard this from lots of people so far this week. Do you think the dollar is pricing in a U.S. recession and a much weaker economy? Or is this just, look, the dollar had a large run for a long time, just like the yen had a large downdraft for a long time, and we're just kind of reshifting now?
I think it's your standard interest rate differential. Suddenly, the rate cut is in play, and we're no longer higher for longer. And that's what happens. Your currency moves against its peers, and now it's easing. And you know what? That is actually something that companies in this country want, because about 40% of the S&P 500 receives its earnings from overseas. We remember when the dollar was at its highest for a spate of months and months and months, and the complaints during the earnings season about how difficult it was because of the strong dollar. So a weaker dollar helps emerging markets. A weaker dollar helps emerging market conditions, because some have dollar-denominated debt and also import exports in dollar commodities. So that's going to be helpful for emerging markets. But overall, it does help. It helps American companies. As long as we're not talking about a collapse, right. We're talking about an interest rate differential, which sounds incredibly boring, but that's what it means.
No, I feel you. I get it.
Hey, Quincy, just real quickly, we got about 30 seconds left. What was your takeaway from earnings so far here? Does that give enough support for risk assets?
Well, yeah, the earnings have been good. Operating margins have been good. However, and there's always a however, moving into 2025, there appears to be a softening in operating margins coming up. And that's a negative. If that actually manifests itself, what you're going to see is perhaps companies are going to have to adjust. And usually that means laying off people, because they have to get to that bottom line.
All right, Quincy, thank you so much for joining us. Quincy Krosby, she is the Chief Global Strategist for LPL Financial here, giving us her thoughts on these markets. And it does seem like there's some kind of coordinated effort. I'm not sure if it's officially coordinated, but it seems like a lot of central banks, have said, okay, enough's enough. We need to start kind of moderating on interest rates.
Yeah, but they would never, ever, ever, ever say that.
Exactly.
I also think that, today will be a day But really, it's going to be about next Wednesday, let's be honest.
Yeah, I know.
And that's going to be NVIDIA. I mean, Citi thinks we could see a 9% swing either way. That's what the option market is pricing in. And the last 2 quarters have been significant. Last quarter, you got a 9% move, a 16% move over the last 2 quarters when it came to earnings. And that could wind up really affecting it, particularly when you're in the last week of August. And liquidity is really thin. I mean, I know strategists who are no longer taking vacations in the last week of August anymore because of NVIDIA.
NVIDIA, $3 trillion market cap, up 150% year to date. This is Bloomberg.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Coming up in this hour, we're going to start off strong. Dr. Vania Stavrakeva, I think I did a better job there. Professor of Economics, London Business School. We're going to get her thoughts on global economics. What is she looking for from Fed Chairman Jay Powell in Jackson Hole? Speaking of Jackson Hole, word is that Tom Keene is to join us for a few minutes and preview what they're going to be bringing us later in the morning as we get ready for another day out at Jackson Hole. So that'll be good. Tom Keene, probably without cowboy hat. I'm going to go with that at the moment. Bob Dole, CIO at Crossmark Global Investments. He's going to talk about the potential equity rally here to finish out this year. So a lot coming up in the next hour, and we're going to kick it off like we do with Lisa Mateo in a Bloomberg Business Flash. Lisa.
You got it. And futures getting a nice lift this morning. This is in the run-up to Jay Powell's Jackson Hole speech this morning. Traders kind of waiting to see whether he's going to open that door for interest rate cuts. Investors pricing in a quarter-point rate cut at the Fed September meeting, but see almost a full percentage point of reductions by year end. We have NASDAQ futures up 0.8%, Dow futures up 0.4%, S&P futures up 0.5%. The 2-year yield at 4.00%. That's little change, and the yield on the 10-year 3.85%, and that is little changed. Quick check of commodities. We have spot gold higher, 2,501 an ounce. We have Brent crude $78 a barrel, WTI crude $74 a barrel. Peloton shares, they soared yesterday at strong profit view, but before the bell, shares, they're lower. They're down about 2%. That's after a downgrade from JP Morgan, citing a challenging path to growth. They're not liking it. There you go. Shares of Nestle, they are down more than 1% in Switzerland. It announced its CEO, Mark Schneider, being replaced after 8 years running the company. Now, Nestle's Latin American chief, Laurent Frex, will take over next month. And Uber, yes, it says it plans to offer self-driving General Motors Cruise cars to customers next year. And that's kind of raising a red flag after Cruise is recovering from mishandling a collision with a pedestrian, so shares down more than 1%. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. And if you are listening to us in Boston, our new home starting September 3rd will be 92.9 FM. That's the day after Labor Day. Bloomberg Radio moving to 92.9 FM in Boston. Let's take a look. We have the Fed. They're in Jackson Hole. Fed Chairman Jay Powell. A lot of economists out there. Is the whole world looking at Jackson Hole today, do you think?
I don't know. I mean, I think that all the economists are looking at it. Do I think my mom is tuning in? I highly doubt that.
Okay, so, all right.
Yeah.
But if I'm an economist sitting in London, I'm probably...
You're into it.
If I'm a professor of economics, say at the London Business School, like Dr. Vania Stavrakeva she's probably paying attention to Jackson Hole. Dr. Stavrakeva, thanks so much for joining us. I think I'm getting your name right with a little help. What are you looking for from Fed Chairman Jay Powell today as you try to frame out what it means for the global economy?
Thank you so much for having me. Always a pleasure to be here. So I don't believe it's going to be a speech in which Powell will want to stir financial markets by surprising them in either direction. So we have the elections around the corner, and he wouldn't want to appear overly political, even more so given Trump's threats to the Fed's independence. So it might be one of those instances where Powell essentially puts much more weight on average market expectations than normal. So the average expectations are 25 basis points. So if he says anything, probably will be consistent with these 25 basis points. Now this brings me to forecasts. What are we going to learn, if anything, in terms of forecast, forward guidance, GDP growth, inflation? Again, unfortunately, I don't think he's going to reveal that much. On the one hand, he do not want effectively to make markets revise their expectations in terms of the policy rate path up or down in order to not generate massive movements. But at the same time, there is a lot of uncertainty of what's coming forward, right? So we have elections, we have two candidates with quite different policies on the agenda. So it is hard for the Fed as well as anyone else to forecast what is going to happen over the next year. Now, he has to talk about something, right? So if you want to avoid expressing a concrete view on where the economy is headed, what do you talk about?
Yeah.
So my prior and my guess is that he's going to try to essentially focus on insights related to the topic of this year's Jackson Hole conference, which is reassessing the effectiveness and transmission of monetary policy. So he can touch upon many issues, but my prior is that there should be hopefully something on the fiscal monetary policy nexus, especially that fiscal policy going forward will continue playing a central stage for the Fed optimal monetary policy debates. So even if markets don't get intuition on, okay, what is the forecast forward, any commitments on the policy rate, they might understand a little bit better what will be the trade-offs the Fed will keep a close eye on going forward.
Vania, when you take a look at the balancing between inflation and the labor data, it does seem like there are still many Fed officials who are genuinely worried about the inflationary trajectory, that we need to continue to see more data to know that disinflation is taking hold. On the other hand, we clearly see some members who are willing to cut in July that are worried that a little move in the labor market data can translate into a big move into the unemployment rate. Where do you think that Jay Powell is going to tread that line?
Again, I think 25 basis points is nothing in terms of real effects on the economy, right? So I think he's going to really try to position himself in terms of not moving markets before the elections. So consensus expectations at 25 basis points. Is he going to come and do something drastic relative to what markets expect, endangering potential swings? Because, for example, if the cut is higher, Trump immediately is going to blame him. If there is no cut, you might risk going in the other direction. So I think they're just going to wait. I don't think the current data necessitates any, particularly big movements. 25 basis points cut is perfectly reasonable based on the data that we have right now. It's what markets expect. It's pretty much safe to stick to that and just wait and see the data coming ahead, and of course the outcome of the elections. Now, one thing that's very interesting is usually when we have elections, right? This works in economics, an uncertainty shock, and the before Biden and the moment Kamala Harris and Trump, they have very different policies in terms of fiscal policies, but also regulatory policies. So you would expect that, firms are going to postpone investment, waiting in order to see who is going to get elected, potentially generating a recession, which would have made the Fed cut sooner. But we don't see that in the investment numbers, and that is something quite interesting. I mean, corporate tax proposals are very different across the two campaigns. That, for me, is a bit puzzling that we don't see much action on the investment numbers in the U.S. in terms of, essentially people delaying investment in order to see the resolution of the uncertainty after the elections.
So, Professor, I guess one of the risks that some investors have here in the U.S. is that this Federal Reserve is already behind the curve, that, in fact, we are already in a recession or dangerously close to one. Do you think that argument has merit?
No, I would disagree in the sense that, so first of all, I don't think that the lags are that big in terms of how quickly monetary policy can impact the real economy. So the perspective of the Fed is probably, yes, if we start to see, a sequence of announcements of macro news that make us concerned about recession, we can act quickly enough to offset that. So I don't think preemptive actions are needed, particularly if you think about the outcome of the elections on both sides of the two campaigns. So like if you take, of course, Kamala Harris, following what Biden is doing, fiscal policy is very expansionary, which generates inflation, right? So at the same time, Trump might increase sanctions and tariffs, which is going to increase the price of import goods, which also might generate inflation. So rushing to cut now and having to increase after, I think it's more dangerous for the Fed based on, they don't know what's coming in terms of fiscal policies, which clearly are going to feed into monetary policy or regulatory policies. So it's much more dangerous to have a lot of cuts now and then to have to justify increases, because this is going to increase even further stock market volatility and bond volatility. And we've seen how volatile essentially asset prices are to even a single announcement, right? So I think they're very cautious of this volatility at the moment.
Before I let you go, you also do a lot of work on the Russian economy, and the IMF published a forecast back in April that the Russian economy would grow by 3.2% this year, really contrary to many others' beliefs. What do you think about that resilience of the Russian economy?
Well, so the higher growth is associated also with high inflation because of fiscal expansion, right? So essentially they are investing in the military, which not surprisingly is feeding into inflation and higher growth. But what's interesting on the Russian front is the recent expansion on the sanctions from the US side. So these secondary, essentially sanctions, where now Chinese banks, Turkish banks, Indian banks are not willing to facilitate trade between Russia and China, Russia and Turkey, etc., because they're going to lose access to effectively the US dollar market, right? So now we expect that these things are going to bite. I mean, there are discussions that Russia is looking into barter transactions with China. Essentially, we give you oil, you give us inputs for our military production.
Right.
That is not so easy to implement, granted that a lot of the producers are private. Having said that, the Chinese government can potentially facilitate a transaction. So we will wait and see how binding and restrictive essentially this new round of sanctions are. Moreover, now the dollar can be traded only OTC. So there are a lot of interesting developments there. So hopefully they'll have a bigger bite than what we've seen so far. Good. I mean, the ruble hasn't depreciated as much as we would like it in order to factor in, the severity of the sanctions.
All right, Doctor, thank you so much for joining us. Really appreciate getting some of your time here today. Dr. Vania Stavrakeva, President of Economics at the London Business School. With our news in New York City, here's Michael Walker.
Paul, Alex, Lisa, reaffirmation of U.S. support for Israel in its war against Hamas and words for support for Palestinian people. It was part of Vice President Kamala Harris's speech as she formally accepted her party's presidential nomination in Chicago last night.
President Biden and I are working to end this war such that Israel is secure, the hostages are released, the suffering in Gaza ends, and the Palestinian people can realize their right to dignity, security, freedom, and self-determination.
Earlier in the day, Donald Trump used a visit to the southern border to threaten tariffs on nations that don't take deported migrants back. Bloomberg's Ed Baxter has that story.
This is an indication that his immigration and trade policy could become closely intertwined. It is also a message that he will aggressively deport migrants that his administration deems should not be in the country. He says, quote, "If countries don't accept the migrants back, we do no trade with those countries, and we charge them big tariffs," end quote. While in Arizona, he again promised that he would complete the building of the wall. Immigration has become the keystone of his campaign. Ed Baxter, Bloomberg Radio.
There may be a new reason for doctors to provide a popular weight loss drug. New research found the weight loss drug Wegovy provides important health benefits to people who are living with heart disease. It finds the drug reduced the risk of heart attack, stroke, or cardiac death by 44% in people who are overweight or obese. The study is published in the New England Journal of Medicine. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Alex, Paul, Lisa.
All right, Michael Barr, thank you so much. We appreciate it. Alex, I'm looking at the markets here. We got a little bit of a lift here in some of the futures. The S&P up by 0.5%, NASDAQ up 0.8%.
But in all fairness, we did see a pretty decent sell-off yesterday, and we accelerated to the downside from about noon on. The S&P closed down by about 0.9%. I mean, it was noon, so you know who got off air at noon? That was you.
I know.
That was you. So it might have been you.
Yeah.
And the semis and tech in particular got hit pretty hard.
Yeah, exactly. So we had, a little bit of a lift here. We'll see how it holds throughout the day. But again, we're going to hear from Fed Chairman Jay Powell, I believe 10 a.m. Wall Street time. That's, I guess, 8 a.m. Mountain time.
Yes.
That's where they are. That's how you do it.
Yeah, you got to do it early because then you got to, relax. You got to take in the sights, the buffalo.
Exactly. The, horseback ride, all that type of stuff. So we'll bring that all. Tom Keene, Lisa Bromwitz out in Jackson Hole. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures on the rise as all eyes turn to Federal Reserve Bank of Kansas City's annual gathering, Jackson Hole, Wyoming, and really what Fed Chair Jay Powell will say during his keynote speech this morning. Now, aside from Powell's speech, there's also, yes, more economic data due out today. We have new home sales for July, and that comes after existing home sales rose for the first time in 5 months in July. So ahead of all this, we have NASDAQ futures up 0.7%, S&P futures up 0.5%, Dow futures up 0.3%. We have the 2-year yield 3.99%. That's little changed. The yield on the 10-year 3.84%, and that's little changed. Commodity spot gold 2,501 an ounce. We have Brent crude $78 a barrel. WTI crude $74 a barrel. Well, it looks like consumers, well, they're seeing some good value in fast casual restaurants because Cava raised its full-year outlook, posted second quarter results, beat expectation. Its shares up more than 8%. Meanwhile, shares of restaurant chain Red Robin, they're down 15%. Guidance missed estimates. It cut adjusted EBITDA guidance for the full year. And say it isn't so. Southwest could be scrapping another perk. Yes, we're talking about them polling customers about changing its bags fly free policy. Shares up about 0.5%. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Tom Keene, he is out in Jackson Hole, Wyoming. If there's ever any place in the world where you could probably lose the suit and bow tie, it would be Jackson Hole, Wyoming.
Totally.
However, Tom's chosen not to do that. So he is in full Tom Keene regalia. Tom Keene, he is the host of Bloomberg Surveillance on radio and YouTube. Tom, give us a sense of kind of how your stay has been out there. What are you hearing from all those smart economists out there?
It's a really interesting year here. I think 2 or 3 weeks ago, Alex and Paul, this was maybe a non-event or at least something more subdued, and now it's taken on a renewed urgency. The world of economics, finance, and investment, it is going to stop for the Powell speech this morning. And where do you see it? You see it in the data check that Lisa Mateo just gave us. We've still got real rates range bound. The 2-year yield's 4%, but that equity market just screams, soft landing, ready to go. A lot of the interest today, paragraph to paragraph in the speech, will be how Chairman Powell frames the path to that hoped-for soft landing.
I have heard, and I have it on good authority, that Tom Keene is the only one wearing a suit.
Yep.
But maybe this changes by the end of the day. Tom, is there any feeling on the ground as to where the Fed is leaning more? Is it the inflation concerns or the labor concerns?
They've got a dual mandate, as we all know, and that dual mandate goes back and forth. I would say typically it is an inflation guess. On the ISLM theory, it's on the LM curve. Recently, we've really come over to a look at the real economy, what's going on with GDP. The unspoken here, and frankly, part of the research papers that will be given, is the mystery of the new technology and the productivity and what it's doing to the economy and the labor force. And the immediate thing, Paul, the absolute immediate emotion here was that stunning 800,000 job revision that we saw a few days ago. Was that because of technology, or was that because of a cratering economy?
Tom, to what extent are the folks out there in Jackson Hole, are they paying attention to what has been happening in Chicago over the past few days with the Democratic National Convention?
A little bit. I would have everyone go to Greg Ip, the wonderful Greg Ip writing in the Wall Street Journal, who sort of summed up the non-economics of our political moment. I would say they're really not focused on Milwaukee or Chicago, but very much they're focused on November 5th. There will be an election. I would like to see today, I'm not sure we'll see it, but it would be good to see a sentence or two reaffirming the Fed independence that's been there really since 1951, tested by Truman, tested by LBJ. To see a reaffirmation of that, as we saw in the Powell press conference, wouldn't be a surprise.
So, Tom, I also, I don't know if you heard it earlier, I had a dream that you were in last night, you were like, hey, Alex, should I go to the $1 Million Cowboy Bar before my hits on Friday? And I was like, I don't know, Tom, how do you feel about that? And you're like, I don't know. And then eventually you wound up going. Did that happen?
Now, the romance of it, and this is true almost every year, is we need to get back for Monday morning. Paul and I got to do the Monday morning show, which means you get on the airplane and go. So this year we are $1 Million Cowboy Bar free.
Oh, okay. So my dream was a total misnomer.
Exactly.
That's highly disturbing. I have another real question for you, though. How much is a conversation about Japan and the Bank of Japan showing up this year in the conversations?
It's a really important question, Alex, made more so by the inflation report. Inflation won't go away in Japan, and that puts a pressure on them to bring those fiction of an interest rates higher. They need to go higher in interest rates, of course, which means all of their fixed income prices go down. Japan is not overtly discussed, but it's on everyone's mind, is not so much being a dysfunctional theory, but to be kind, being an original theory. I see the sun just coming out here at Jackson Hole. When we're done with this, I'm going to turn around and look where the deer and the antelope play.
Exactly. We were just actually talking about that here in New York. Tom, I said, boy, it's dark out there in Jackson Hole for 6:20 in the morning. Tom, is there talk out there about the economic exceptionalism of the U.S. versus other parts of the world? Because I'm guessing there are folks out there from other parts of the world.
There is. It's written about. Ambrose Evans Pritchard had a sharp essay in the Telegraph in the last 24 hours asking, what does the world do when the American exceptionalism ends? And that's one of the worries about recession and GDP slowdown and the rest. What I would suggest is, and it's particularly, you come out to Wyoming, you come into the airport here, Alex, and there's 47 Gulfstreams lined up. The prosperity of the West, the prosperity of technology is substantial in America. It's in your face in Wyoming, and there's a real understanding that we lead at that. You just had on Dan Ives at Wedbush lifting up his NVIDIA estimate, and of course NVIDIA, I believe it's August 28th. Maybe I don't think NVIDIA is more important than Chairman Powell's speech, but maybe it's close.
Yeah. All right. We'll see. Yeah, we're going to be all locked in on that next week.
Oh, yeah.
Tom Keene, thanks so much for joining us. Appreciate your reporting out there. Tom Keene, Bloomberg Surveillance. He and Lisa Abramowitz have a special editions of Bloomberg Surveillance this morning, live from Jackson Hole. That'll be 9 a.m. to 11 a.m. Wall Street time.
And then Paul and I will be back for Bloomberg Intelligence from 11 to 12 to help take you through to the lunchtime. It does feel that NVIDIA has the potential to be a true market event. As I was mentioning earlier, you're looking at a 9% swing either way by the options market. And that's reporting to Citi, which would basically equate to about $270 billion on the line. So, yes, it will be something to be sure.
Yeah, and you think about NVIDIA, it's been not just an NVIDIA story, stock up 150% this year, but it's also been a technology sector story,
totally.
And it's been a broad equity market story, I'm saying starting 2023 into this year. And now it's evolving a little bit, that the AI story is evolving a little bit to people asking some more questions about the return on the AI investment. We see the big CapEx numbers coming out of these big enablers and the big technology companies, and they're ramping up their CapEx by billions of dollars for AI investments. And now we're actually starting, in the last quarter or two, investors kind of asking the question, okay, now what's the return on this investment we've all bought off on? And that's kind of been, I guess, probably the next natural step of the AI story industry.
Well, here's also an interesting story here, and just sort of staying with the Mag 7 for a second, and that's Tesla. It's a great article out on the Bloomberg terminal that basically California's assembly lines for Tesla have been selling, but at steadily lower prices. So you take a look at, say, CarMax, a superstore over in Fremont, California, has seen a steady stream of shoppers that are more than ever willing to buy Tesla because of those lower prices. Great for the top line, right? Because you get more revenue coming in, but bad for bottom line because it hurts the margins. So what that trade-off is if you're an investor for some of the Mag 7s.
Yep, and I think it kind of goes to the issue of the EV story. Again, talking about a story that's been evolving over a number of years now. It seems like the discussion is, what is the ultimate demand for EVs? It's different in different parts of the world, very strong in China. Less so in other parts of the world here, including the U.S. We saw Ford Motor Company pull back recently and take a write-down. So, again, lots of stories out there for investors to chew on. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures pointing to a higher open. Investors kind of waiting for these words from Fed Chair Jay Powell this morning as he continues toward that goal of bringing inflation down without a recession. Now, the latest U.S. economic data, it was mixed. You had American jobless claims data that showed that the labor market cooling only gradually. U.S. manufacturing activity shrank to the fastest pace this year, and existing home sales that increased for the first time in 5 months. Today, we'll get some more information on new home sales for July. So we have NASDAQ futures up 0.7%, S&P futures up 0.5%, Dow futures up 0.3%. The 2-year yield at 4.01%. That's little change. A yield on the 10-year 3.85%, and that is little change. To currencies, the dollar retreating. We have the Japanese yen strengthening after hawkish comments from the Bank of Japan governor. Right now, it's up about 0.1% at 146.11 against the dollar. Euro, British pound stronger. We have Bitcoin up 0.3% at 60,000. Shares of retailer Ross Stores, they're up about 5%, boosted its earnings per share forecast for the full year. Then you have shares of Crocs, yes, still getting that lift, up about 0.5% now, and that's thanks to the company's partnership with actress Sydney Sweeney. And Nvidia reports earnings this week. That's on Wednesday, but shares up 1%. Investors kind of waiting to see if that AI-fueled tech rally has a little bit more room to run. That is your Bloomberg Business Flash. Paul and Alix.
All right, Lisa Mateo, thank you so much. We appreciate that. We got Alix Steel sitting in for Tom Keene because he's out in Jackson Hole. We're going to join Tom in about a half an hour's time along with Lisa Abramowitz. We're broadcasting live from the Bloomberg Interactive Broker Studio, streaming live on YouTube. And if you're listening to us in Boston, go Yanks, our new home starting September 3rd will be 92.9 FM. That's the day after Labor Day. Bloomberg Radio moving to 92.9 FM in Boston. You want perspective on these markets? You want experience in these markets? Our next guest has got all of that. Bob Dole, CIO at Crossmark Global Investments. I first came across Bob Dole when he was a Merrill Lynch investment manager back in Princeton back in the day. So how about that? Hey, Bob, you've been around the block once or twice here on these markets. Can you put the last, I don't know, kind of 3 weeks into perspective? Because we've had a VIX jump above 60, and now we're back down to under 17. We've had markets all over the place. Can you put all that into perspective for us?
Yeah, I'd make 3 observations about the last 3 weeks. One, we had the round trip, as it were, the scare about the economy slowing, aggravated by the yen carry trade. That was quick, and of course, we retraced just about all of that. Secondly, we completed second quarter earnings. They were quite good, but underneath the surface, as that was being reported, third quarter earnings estimates and next 12 months have been slowly coming down. And the third big change, of course, is will Donald Trump win or win by a landslide has been replaced by, I don't know what to say. So political certainty has gone up.
What about earnings, though, Bob? Good to see you again, by the way. So it's been a long time. What about earnings? How much have they played into the moves in the equity market versus the election drama and versus other fundamentals on the macro side?
Great to see you as well, Alix. Look, I think earnings in the long run are what really, really matter. And I think part of why the market has done well year to date has been earnings keep coming better than expected, and the numbers going forward have generally been moving up until recently, and that's why I point that out. We don't need earnings estimates to be coming down, but they're going to have to if the economy is truly slowing, which I believe is really true. And then the big question is, are we going to have a soft landing or a harder landing? And only time will tell.
How much are you focusing today, Bob, on Jackson Hole, Wyoming, Fed Chairman Jay Powell?
Well, look, I think the whole world is, so I think he knows that, and he is very likely to say, we're likely to cut rates real soon and signal probably more more cuts to follow. If he doesn't say those things, we're going to have a different reaction in the market, but I think it's going to be pretty much according to script.
What do you like? What do you like in the market? What sectors? What looks good? Like typically in a rate cutting cycle, right? It's going to be the value plays. But if we're cutting here from the Fed without a recession, is it still the value plays or is it going to be tech again?
Well, as you know, the value stocks quietly in the last few weeks have begun to outperform. There's probably more of that coming. It's consistent with the market broadening somewhat. Whether it's growth or value, I want to focus on earnings predictability, earnings persistence, and good cash flow. Why do I say those things? Because I'm a little nervous about the economic environment. And so I want stocks that I think can hold their own, even if it gets a little squirrely out there.
How about in the bond market, Bob? You can sit at a 2-year treasury and get 4%. That's not so bad. I mean, given what we've seen over the last dozen years or so. Do I sit there or do I take some credit risk?
I think you do have some money in the bond market. I think you can continue to slowly lengthen duration, especially into weakness. Credit, I'm a little more concerned because I think the economic downturn is going to be a little more significant than consensus. I think spreads will widen some, so I'll be careful how much corporate and high yield you have in the portfolio.
Why do you think it's going to be a little bit worse? Like, what are the indications for you?
The slowing in the consumer, Alex. Look, for quite some time, we've had the low-end consumer squealing about this, that, and the other thing. Now the middle-income consumers are struggling. And you see that with credit card uses, et cetera, et cetera. The economy can't do well if low and middle-income consumers are struggling.
Yeah, I know. I get that. It's like, just look at like TJX and sort of the Walmarts, and you're sort of seeing, the trade down effect. So I'm guessing small caps are off the table for you, Bob.
Yeah, look, it's a hard one because, of course, they're cheap relative to big ones, but we know historically they do best in an economic accelerating environment, not the opposite. So the time will come. I don't think it's yet. I read recently that 2/3 of that massive outperformance we got in small cap in July has been reversed. So it was pretty much a false move. So I wouldn't be zero in small cap, but I wouldn't be aggressive either. Not yet.
Bob, earnings season that we just kind of finished up looked pretty solid. Was it solid enough to support these valuations?
Yeah, Paul, it was, as I mentioned earlier, because up until recently, it's been accompanied by earnings estimates moving up for the balance of this year and next year. Now that's beginning to change, as analysts are saying, economy's slowing, top line's going to be more questionable. Maybe I better be a little cautious about the numbers. So you exceed second quarter expectations, but then you cut the third quarter. That's not a great combination.
Do you like anything outside of the U.S.? I mean, there's a lot of geopolitical risk out there, and Paul's been talking about U.S. exceptionalism and how long that's going to wind up lasting for. How do you view it?
So, Alex, I'm going to make a broad, longer-term comment.
Okay.
I see lots of portfolios that have almost nothing outside the U.S. for Americans. And look, stand up, take a bow has been the right thing to do for the last decade or so. I'm not convinced that's the right thing going forward. So begin a slow dollar cost averaging out of the United States. Get some international into the portfolio, and at some point you're going to wake up and say, oh, that was a good move. I think we'll get some dollar weakness at some point that will also be a tailwind for that thought.
Hey, Bob, we were just talking about AI and how it's been such a driver for these markets really over the past 2 years or so. And you've seen a lot of big changes in technology, changes in the consumer over your investment career. Where does AI stack up for you? How real is it for you? And how exposed do you think your portfolio needs to be to it?
It's real, no question about it. The question is pace. How long will it take? Look, the stock market always gets these new things right by jumping on them, but often does it too far, too fast. And that's the debate we have to have. Look, that the average company is going to have more productivity because of AI, I think, is unquestionable. We just don't know what the pace of that's going to be. So,
exactly.
Play AI, but don't get over your skis on it.
But what's interesting is I feel like we've also heard of some delayed CapEx, not necessarily for AI or tech spend, but just like project shovel ready stuff getting pushed off a little bit from uncertainty, etc. And I wonder if we're overestimating the CapEx cycle, whether it's AI or something else.
I suspect that's right. There has been some secular improvement in CapEx, but the cyclicals dominate. And there's some caution out there for all the obvious reasons we've been discussing. So I'm with you. Be a little careful how CapEx exposed you are.
All right, Bob, thanks so much for joining us. Really appreciate it. Bob Dole, CIO, Crossmark Global Investments. He's been in this market a long time. Again, he was a leading player. When I was young in the business, going down to visit Merrill Lynch Investment Management in Princeton, he was a player then. I mean, portfolio manager then. So he's been doing this a long time. So appreciate getting a few minutes of his time. Right now, with our news, in New York City. Here's the Michael Barr.
Thank you very much, Paul. Alex, Lisa, Kamala Harris has summoned Americans to reject political divisions and instead chart what she called a new way forward. She accepted her party's nomination with a speech last night that blended biography with warnings about electing Donald Trump again to the White House. And she had a message for her husband, Doug Emhoff.
And happy anniversary, Dougie. I love you so very much.
Kamala Harris now faces a challenge to turn the vibes from her convention into a policy platform. Bloomberg government Zach Cohen has more from Washington.
Harris's entire focus here has been to try to rally the Democratic Party around a candidacy that's really only a couple of weeks old. And one of the key strategies behind that has been to keep a relatively light policy approach. There were some exceptions in her speech last night, which got into some of the more specifics than we had seen in the previous 4 nights. She talked about easing the housing shortage. That's partially to blame for the rise in the cost of housing, both in purchased homes as well as rent across the country.
Bloomberg Zach Cohen. Former President Trump made a visit to the U.S.-Mexico border in Arizona. It's part of his swing state tour this week. At the border, Trump said that unlike Kamala Harris, he will finish building the wall.
She will never build the wall. She doesn't want to build the wall. She's only saying if she changes her mind, it's only because she wants to get elected, because who wouldn't want to have a strong border?
And then later in the day, Donald Trump also made several posts on his social media platform providing real-time critiques of Harris's speech. A volcano in southwestern Iceland is erupting for the 6th time since December, spewing lava through a new fissure. The eruption began after 9 p.m. last night, and within the hour, a 2.4-mile fissure cut through a crater. The eruption has forced road closures, but the lava is not flowing toward the town of Grindavik. It was the largest evacuation back in December of the town when the volcano came to life after being dormant for about 800 years. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Alex, Paul, Lisa.
Did you see the pictures of that, of the volcano?
Yeah.
No.
Oh my gosh.
Really?
It was amazing.
I'm amazed that the thing was dormant for 800 something years,
Right?
and all of a sudden in December is like, hello, we're going to party. And the poor people in that town in Grindavik are like,
No, please.
I didn't sign up for this.
Like, do you insure against that? Like,
Yeah,
is it like, you got flood insurance and volcano insurance now? Is that what we're looking at? I don't know. The pictures were
amazing.
crazy.
All right, very good. Keep an eye on that one because it
Top
seems like
that.
it's an active one. Do you have any interest in the railroad business?
Oh, yeah, I do.
You do? Okay.
Real economy. When I play Monopoly, I love, shocker,
Okay.
the utilities and the railroads.
Ah.
Now, I tend to lose a lot. However,
To a
I
9-year-old?
love those. Yeah, pretty much.
Canada's
But-
2 largest railways are preparing to restart operations after Prime Minister Justin Trudeau's government stepped in to try to end the labor dispute that has stopped freight movement across the country. The labor minister asked Canada Industrial Relations Board to impose binding arbitration on Canadian National Railway and Canadian Pacific and the Teamsters Union. He also ordered the board to direct the parties to extend their current labor contracts and said the railways should resume operations forthwith.
Yeah. Workers at Canadian National said they'd take down picket lines and go back to work on Friday. However, thousands of employees in Canadian Pacific are still off the job. The railroad said the union wants to challenge the constitutionality of the government's decision. So, it's not 100% over yet. There's still clearly some issues, but this could have been really bad.
Yeah.
We saw what happened during COVID when supply chains were so disrupted.
Yeah, and I didn't know this, but I should have known this because I covered the railroads back in the day. The 2 railways, Canadian National, Canadian Pacific, they control 80%
It's
of
huge.
Canada's rail network, and shutting them down swiftly causes economic harm.
Do you do Monopoly and Park Place
I don't
and
play board
Boardwalk?
games. I don't play
But
board
when
games.
you did, were those your jam?
Wow. I made a lot of money on the railroad stocks though back in the day.
See,
so.
I know they're a good investment.
Yeah, and lots of banking. They need high yield debt. It's good stuff. So we enjoyed banking the railroad companies. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Yes, it's the countdown to Fed Chair Jay Powell's keynote speech at the annual symposium in Wyoming. Now, aside from his address, the three-day conference, it also has a speech from the head of the Bank of England, Andrew Bailey, a panel discussion on monetary policy, and also a presentation of 4 research papers from economists. Now, ahead of all this, we have NASDAQ futures up 0.8%, S&P futures up 0.5%, Dow futures up 0.4%. We have the 2-year yield at 3.99%. That's little change. The yield on the 10-year 3.84%, and that's down 1 basis point. Commodity spot gold higher, 2,500. We have Brent crude $78 a barrel, WTI crude $74 a barrel. Shares of Workday, they're higher. They're up about 12%. Executives said the company would sharply increase profitability over the next 3 years, so investors like the sound of that. And then tax prep software company Intuit reported fourth quarter results, beat expectations, but it also recalibrated its long-term growth expectations, and that has shares up just a tick right now, just up about 0.3%. And shares of Alibaba, they're higher. ADR is up about 2%. Shareholders approved a plan to upgrade its Hong Kong listing to primary status. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. All right, Alex, our next guest, Tom Davis, portfolio manager, Jennison Associates, yada, yada, yada. He's worked all over Wall Street, Morgan Stanley, Putnam. I guess there's some Dartmouth College in there somewhere. But the highlight by far of his career, he's a graduate of the Fuqua School of Business at Duke University.
Oh, I see where this is going.
Yeah, I guess, but I'm guessing he's a year or two after me. Most people are after me. Tom, thanks so much for joining us here. I know you guys, and you in particular, have a global remit here. Globally, as we sit back here and wait for Fed Chairman Jay Powell out in Jackson Hole, where do you see the best opportunities, Tom, you and your team at Jennison?
Sure. Great. Morning, Paul. Morning, Alex. Great to be with you. And yeah, Paul, I was only a couple of years behind you. Not far, though, I have to say, early to mid-90s. In any event, listen, great question. You know, for us, we see the best opportunities in 3 areas, really, that have long been areas of our focus just because of their propensity to offer up really interesting, exciting growth. Obviously, things in technology, things in healthcare, global consumer. But if I get more specific, think about what we're seeing in the AI ecosystem in general. You know, at the moment, certainly over the last couple of years, 18, 24 months, it's been just nonstop AI. We've been focused in particular on the profitable side of this, what we often refer to as the foundational area, the infrastructure. It's the chips, it's the companies that design the chips, the companies that manufacture tools that ultimately make the chips. So, you know, it includes everything from NVIDIA, not surprisingly, to the likes of an ASML as well as others. And we think that this area still has a long way to go. The opportunities here are just tremendous. It's going to turn into a very long-tailed secular trend that probably extends out over the next decade, if not 2 decades. So really exciting for us.
So that's a great point, because you're looking at a secular trend, but still a cyclical market. Chips, no matter which way you look at it, is still a cyclical area. We just don't know what the AI chip cyclicality is going to look like. How does that set you up when you're looking at entry points for chip stocks?
Yeah, no, great point, great question. Look, we have to deal with what we see here and now and what the companies continue to report quarter after quarter. We're always looking for that, those signs that may suggest we're starting to reach a peak, reach the end of this current cycle. We do think that the AI world offers probably a longer cycle than perhaps we've seen in the past, just because of the extent of the opportunity. That really is global. It extends to not only a corporate level and a sector level, but even a sovereign level. If you talk to NVIDIA, they will talk about how so many individual countries themselves are coming to their doorstep for help and guidance in addressing this issue. So we think that there's still plenty of room to go. You listen to someone like Mark Zuckerberg a week or two ago on the earnings call, suggesting that the bigger risk is underinvesting, not overinvesting. And so, you know, we take all these data points, we triangulate what we're hearing from companies, you know, not only on the chip side, but even on the data center side and those companies that construct data centers, and look at, you know, what that demand profile, you know, suggests certainly for the next 1 to 2 years. And we're still very comfortable as we think about this opportunity with what we're seeing. But yes, we certainly recognize it's a cyclical industry. It has been in history, and it likely will be going forward. We just have to recognize that this is a tremendous game-changing opportunity with all that AI may bring us over time.
This next question is for our colleague Matt Miller. Ferrari is on your list.
Oh boy.
What do you like about the stock of our good friends in Italy?
Listen, the thing about Ferrari is it and other high-end or ultra-luxury type brands have tremendous relationships with their customers. They ultimately control their inventory. They're very, very exclusive. And in the case of Ferrari, you've got order books that extend out to 2026 and probably even in some cases 2027. I often tell clients, look, the people who could afford a Ferrari 2 years ago can continue to buy it. They could take delivery today, or they could take delivery 2 or 3 years from now, and it's still going to get bought. It is a kind of car, the kind of product, and the consumer that buys it is such that they're generally insulated from the economic environment we're in, or any economic environment for that matter. They're generally insulated from interest rate environments. And look, they only produce 13,500 units a year. So, it is a very, very rare asset on a lot of different attributes.
Let's go to Eli Lilly. You also like that momentum in that stock. Is this a purely ZEP-bound bet, or are there other catalysts that you think are going to play a role here?
So the thing about the healthcare stocks in general, we look for companies that have the opportunity to create blockbusters that really offer solutions to unmet medical needs to as large a marketplace as possible. And whether it's Lilly and Novo with the obesity drugs, the GLP-1, Zepbound in the case of Lilly, as you mentioned, Wegovy in the case of Novo Nordisk, the market opportunity is huge. The supply is still yet not at a point where it's meeting demand. But to your question with Lilly, the nice thing about Lilly is it does also have a much larger franchise of drugs on the market, as well as a very strong pipeline behind it. So that's the next thing you have to start looking at when you have huge drugs, huge success, is what comes behind it. What's the next generation that's going to fill in and continue to support the growth profile going forward? And Lilly is one of these businesses that has a really nice pipeline of additional drugs in addition to what it's already got on the market. But I want to go back to one thing specific to Zepbound and in the case of Wegovy or Novo. Neither company is producing enough to meet the demand that they're seeing. Right, neither company is offering the product to the entire marketplace. There are countries that have yet to actually see it arrive in their stores. So for the time being, it's largely focused around the opportunities to address obesity with these drugs and ramp supply rapidly as we go forward.
Hey Tom, in emerging markets, one of the names that's been on my radar screen for the last 3 or 4 years after coming to my attention is Mercado Libre. Talk to us about that company and why you guys like that stock.
Yeah, this is a fascinating company, Paul. We've been involved with Mercado Libre well over a decade, probably back into the late 2000s when it first really started to hit the radar screen. And think of Mercado Libre as the Amazon of Latin America in particular. Started out as the e-commerce platform, but these days it has diversified itself into a fintech as well. Roughly half the business is related to fintech products and services that it offers. So it is a blockbuster powerhouse in Latin America with the e-commerce platform, its historical roots, as well as financial services in a digital sense that continue to grow. And they just keep delivering quarter after quarter, year after year. They've had certainly some competitive challenges. Amazon, is interested in Latin America. We've seen some of the Asian players try and enter Latin America from an e-commerce sense. But frankly, none of them have been able to knock Mercado Libre off its perch as the leading player in its space. And we think that that's a really, really interesting position that it sits in.
All right, Tom, thanks so much for joining us, sharing some of your ideas there. Tom Davis, he's a portfolio manager at Jennison Associates, another success story coming out of the Fuqua School of Business at Duke University.
He was awesome. That was really interesting.
Yeah,
that was great. I love the whole cyclical and then secular moves.
Yeah.
And how you play that.
Yeah, and he's got that emerging market name in Mercado Libre. I was just looking up the shareholders for Mercado Libre, and the symbol is MELI. They're the 6th largest shareholder is Jennison. If you take out an insider, the 5th largest shareholder. So they've been there for a while, as Tom said. It's kind of, as was pitched to me 3 or 4 years ago by a BI analyst, it's kind of the Amazon of Latin America.
Oh, yeah.
And I bought off on the Alibaba being the Amazon/Google of Asia, in China. So that's how it works. All right, we're going to have more coming up. Oh, you know what?
We don't.
We
Tom
don't have more.
Keene and Lisa
Tom Keene and
Bromwitz
Lisa
do.
Bromwitz are coming up from the
beautiful Jackson Hole, Wyoming.
All right, that's Bloomberg.